Ira Epstein with your weekend edition of your metal market wrap-up. And this wrap-up is with the weekly charts we are on Sunday night, 21st of August, 2022, just after 6:15 p.m. Central Time. So the event of the week is going to be the Jackson Hole Symposium. That takes place starting this Thursday, 9 in the morning Central Time on Friday. Fed Chair Powell, our Federal Reserve Chair, gives his speech. All eyes will be on that, and there's many speakers taking place. I mean, you've got all the big boys in town. You'll have all the press there. You'll have interviews galore on all kinds of the financial TV stations. So what do you expect out of it? Well, I think that you're going to hear hawkishness out of just about all the central bankers. Certainly our Fed Chair Powell, he was wrong last time. There hasn't been a live meeting since 2019. He'll be there talking. How could he be anything but hawkish? However, he won't allow himself to get corralled to saying, is he going with a 50 or 75 basis point hike at the September 2021 meeting? To do so means he's not data dependent. He said they're going to be data dependent, and I'm sure they're going to bring that up again. So in between the Jackson Hole meeting and the September 2021, you get jobs data and CPI. That's your dependent. So we will see. If they're hot, just mark down on your calendar, 75 basis point. If the CPI falls on its own, another 0.5 percentage point as an example. And if jobs don't come in as hot as they did, but slip back ideally with a correction to the last one, well, that might bring the 50 basis point. Got to wait and see what they're going to do. Trying to second guess all this. Number one, why? Then, where are we right now? You are in the dog days of summer. You're coming to the end of the summer break. As you come to the end of the summer break, what happens is traders take their last vacations. Those away start returning for the Labor Day period. They'll be back in town right after that. The A-League returns. Don't try to be a hero making something out of nothing right here. That's my point. When we look at gold on a monthly basis, what you did is you had a false breakout to the upside. You pulled right back, went down just this past week, and what did you do? Last month, to the lower Bollinger Band, and you've rallied back to what I call that line in the sand, the 18-month moving average of closes. You're caught in this sideways action, so to speak. I expect it to stay there until we get more news out of Jackson Hole. When we look at the weekly closes, we had an attempt at a rally that's failing miserably right now. It's the headwinds of high interest rates causing a strong U.S. dollar that the market is fighting. I would say if you get weaker data in terms of jobs and CPI, gold actually gets a bid under it. If you get stronger data, in other words, add more jobs or stay like you were and get really rough CPI where it doesn't drop very much, then you've got a different ballgame. You've got to take a look and see what those numbers are going to do. As we take a look at a weekly bar chart, you get to see that you've got a pattern and you've been in it. Beginning right here, a stepping ladder to the downside. That's bearish. What breaks the pattern is taking out 1804.90. Also, you've got to pay attention because right there waiting for you is the combination just above it at 1814.60 and 1826, the 18-week and the 100-week moving averages. Close over those, and you have reason to be friendly until whatever this break low is. Don't take that out. And until you take out this 1804.90, I think you're in the bearish camp. The momentum could carry down to 1690.80, the lower Bollinger Band, with the 200-week moving average at 1665.90. Slow stochastics, you had a correction to the upside. Now they're pausing. So momentum's pausing. Trend down, bias down. Market's in a bear phase. Silver lost to gold over this past week. You can see it's climbing back up near the highs that it was at. The trend here also lower highs, and now you could take this red arrow and you could even move it there. Lower highs, lower lows. Could be going the next move to 339.77, the 200-day average. But if you were to take out 371.30 in copper, that would give you the pattern of higher lows, higher highs. Now in copper, pay attention. China's got property problems. People bought mortgages, they didn't want to pay on them, properties aren't getting finished, the developers ran out of cash, they took people and they said, hey, we're going to build your home, and they didn't have it to do. So what China is doing is they have made easy money. They told their regional banks, you make sure these homes get finished. Make sure these property people do that. Well, that's demand for copper then right away, because building roads, putting up a building, putting electricity in it, demand for copper. That's why copper is broken away from gold and silver. In the platinum market, the fear in platinum has been, do we tip the economies over? And that hurts demand for automobiles, be it catalytic converters. Yet, when you come to the dollar index, you've got a pattern of higher lows and higher highs. So I'm looking for the resistance near the 109 area. That would put the euro probably under the 100 zone. So these are the things in the way that I'm watching the markets, and I'll be writing about all my different thoughts on them all week long. Now, if you haven't had my complete research or a free access to it and tried it out, why not? I just said free. You're going to get my twice daily written updates. I write one update Sunday night, then Monday through Thursday, 2 a day minimum. If I have a special update, I'll put it out. I put out buy and sell recommendations in it. I bring you right to the key parts of the market. I write in bullet forms. The idea for me is I don't want you to be reading more than a few minutes and that's it. I don't want this to take up your time, but I'm going to bring out ideas to you, thoughts, get you thinking about it. And then I back it all up with my videos where I'm able to say buy here, sell there, here's the objective, here's the stop, here's where I'm right, here's where I'm wrong, this is why I'm recommending the trade. And then from there you decide, does that seem to fit in with your overall scheme of things? It works on all devices. You get, by the way, our charting software to play with for your phone. Give it a try. All you need to do is either call my staff or just follow my finger, take your cursor, put it up on the top of the screen. You'll see the free offers. Go right there, play with it from that point. Sign up. We'll get everything to you right away. I'm Ira Epstein. You have a great evening. I'll see you tomorrow.